Welcome back to your ultimate pit stop, Piston Pundit. Something unusual is happening right now, and it could impact where your next car is built, how much it costs, and how stable the supply chain behind it really is. But here's the catch: almost nobody is paying attention, because it's happening quietly beneath the noise of global headlines. Behind the scenes, countries are starting to rethink long-standing dependence on the United States, not through dramatic moves, but through calculated, strategic shifts. Canada is one of the clearest examples, and once you see what's happening there, you start noticing the same pattern everywhere. So what's really changing, and why does it matter more than it seems? Let's break it down. Silent realignment begins. Allies quietly rethink dependence. For decades, the US and its allies operated like a perfectly tuned engine, deeply integrated, synchronized, and efficient. Trade, defense, and even digital systems were interconnected to the point where separation seemed almost impossible. But over the past year, that seamless system has started to show signs of recalibration. What's happening isn't loud or confrontational. Instead, it's a quiet adjustment in strategy. Countries aren't pulling away, they're hedging. The idea that one partner will always remain stable and accessible is no longer treated as a certainty. For Canada, this realization carries serious weight. Sitting next to the US and deeply embedded across multiple systems, even a small shift in mindset creates ripple effects that extend far beyond its borders. But this shift isn't just a change in mindset. It's already showing up in the systems that power everyday life. Hidden internet pathways. Data quietly depends on US infrastructure. Here's where things get surprisingly technical and incredibly important. Much of Canada's internet traffic doesn't actually stay in Canada. Emails, banking data, and everyday online activity often travel through US-based infrastructure before returning. For years, this setup worked like a well-optimized network, fast, efficient, and invisible. But now, it's being reevaluated. Why? Because routing critical data through another country introduces a level of dependency that wasn't fully appreciated before. It's not about failure, it's about exposure. That's why Canada is exploring alternatives, more direct international connections, stronger domestic routing systems, and even satellite-based communication layers. Think of it like diversifying a powertrain. Less reliance on a single system means more resilience when conditions change. But once digital systems start getting reinforced like this, the shift doesn't stay limited to data. It begins expanding into national strategy. Before we dive deeper into that broader shift, if you're enjoying this breakdown, make sure to hit that subscribe button and stay tuned with Piston Pundit for more insights like this. Now, let's shift gears and see how this thinking goes beyond just technology. Beyond telecom, nations rebuild critical systems for control. What we're seeing now goes far beyond internet cables and data flow. Digital infrastructure is being treated like critical energy supply, something too important to outsource entirely. Efficiency used to be the priority. Now it's about control, redundancy, and long-term stability. Governments are investing heavily in systems they can rely on independently if needed. That includes data storage, communication networks, and satellite coverage, essentially building a parallel layer of security beneath existing partnerships. Canada's approach fits neatly into this broader global shift. It's not about replacing alliances, it's about removing single points of failure. And once that mindset takes hold, it spreads fast. Because in today's interconnected world, resilience is becoming just as valuable as raw performance. And when resilience becomes the priority, it doesn't just influence infrastructure, it starts directing where global capital flows. Global capital shifts. Investors now prioritize stability over growth. While these structural changes build quietly in the background, another force is moving just as decisively: capital. And unlike before, it's no longer chasing growth alone, it's chasing stability. Canada is positioning itself like a well-balanced platform, predictable, structured, and less exposed to sudden shocks. That's exactly what global investors are starting to prioritize. We're seeing stronger interest in infrastructure, energy, and critical resources, sectors that behave more like reliable torque delivery than risky peak horsepower. At the same time, technology investments, especially data centers and long-term development projects, are gaining traction. This isn't random. It's a deliberate strategy to attract capital that values consistency over volatility, much like choosing durability over short-term performance gains. And when capital starts moving with that kind of intention, the bigger strategy behind it becomes much clearer. The bigger strategy revealed: reducing risk while building resilience. Step back, and this no longer looks like isolated decisions. It starts to resemble a coordinated system. Digital independence, infrastructure reinforcement, and investment attraction aren't separate moves. They're interconnected, like components in a finely engineered drivetrain working toward a common goal. The strategy is clear: reduce vulnerabilities while strengthening internal capability. It's about ensuring that growth doesn't come at the expense of resilience. In today's world, stability itself is becoming a premium asset, arguably more valuable than rapid expansion. This doesn't signal a collapse in U.S. partnerships. Far from it. But the nature of those relationships is evolving, from reliance to balance. And once that balance becomes the new baseline, it begins shaping what comes next across industries, including automotive. What happens next? Global systems shift toward resilience first. This transformation may not dominate headlines yet, but its impact could be far-reaching. We're entering an era where resilience matters more than convenience, where redundancy isn't inefficiency, it's insurance, and where even the strongest alliances are being recalibrated with a more practical lens. For industries like automotive, this matters more than it seems. Supply chains, battery sourcing, semiconductor access, and even software ecosystems all depend on stable infrastructure. When that foundation evolves, vehicle development and production strategies follow. Think of it like redesigning a platform architecture. Once the base changes, everything built on top adapts. And that includes the vehicles we drive, the tech we rely on, and the markets that shape them. And when the foundation shifts like this, it signals something much bigger than a temporary adjustment. A quiet transformation, early signs of a global reset. This isn't a story of sudden disruption, it's a story of preparation before pressure hits. Countries aren't assuming stability anymore, they're engineering it. Much like refining a powertrain for long-term reliability, the focus is shifting toward readiness, adaptability, and control. Canada offers a clear snapshot of that mindset in motion, and if this pattern continues, it could signal the early stages of a much broader global recalibration. Now we want to hear from you. Do you see this as smart long-term planning, or the beginning of a deeper global shift? How do you think these changes will impact industries like automotive, energy, or tech? And could this reshape where future vehicles are built and sourced from? Drop your thoughts in the comments. We're always curious to hear your take. For the latest updates on the automotive world and more in-depth analysis, subscribe to Piston Pundit and hit the notification bell. Thanks for watching, and see you in the next one. You can now check out any of the videos on the screen. There's plenty more to explore.